How to pay off your mortgage faster, step by step. Want to own your home years earlier and save tens of thousands in interest without a windfall? Here's how to do it step by step with a real example so you can see the numbers. Step 1. Know your numbers. Start by finding 3 things: your current principal balance, your interest rate, and the number of months left on your loan. This tells you your regular monthly payment and how much total interest you'll pay if you change nothing. For example, a $300,000 mortgage at 4% for 30 years has a monthly payment of about $1,432. Over the full term, you'd pay around $215,609 in interest.
Step 2. Pay extra each month.
Even a small extra payment toward principal makes a big difference. In our example, adding $200 extra per month would shorten the loan from 30 years to about 23 years and 10 months, saving roughly $50,412 in interest. Always make sure extra money is applied directly to the principal, not future payments. Tell your lender clearly or use the Apply to Principal option online. Step 3. Make one extra payment per year. You can do this by switching to bi-weekly payments. Paying half your monthly amount every 2 weeks results in 13 full payments a year instead of 12. This chips years off your mortgage with little effort. Step 4. Use lump sums and windfalls. Tax refunds, bonuses, or other one-time cash can be applied directly to principal. Even occasional lump sums can have a big impact on the total interest you'll pay. Step 5. Apply salary increases and round UPS. If you get a raise, send part of it to your mortgage automatically. You can also round your payment up to the next $50 or $100.
Small amounts add up over time.
Step 6. Prioritize other debts first. If you have high-interest debt, like credit cards, pay those off first. Compare your mortgage interest rate to possible investment returns. Some people prefer investing extra money if the returns are higher, but paying off a mortgage offers guaranteed savings and peace of mind.
Step 7. Check for prepayment rules.
Look for prepayment penalties in your mortgage terms. Keep an emergency fund so you don't leave yourself short on cash. Always confirm that your lender applies extra payments to principal.
30-day action plan.
Review your mortgage statement and note your principal, rate, and term. Choose one strategy to start: extra monthly payment, bi-weekly schedule, or one annual lump sum. Contact your lender to confirm how they apply extra payments. Automate the process so it happens without thinking. Review your progress in 6 months and increase your extra payments if possible. By following these steps, you could save years on your mortgage and tens of thousands in interest. Start small, be consistent, and watch your debt disappear faster than you thought possible.